Hi, my name is Tom Long. I'm with Daily FX, and I'd like to take a few minutes to share with you one way that banks make money. Since they are banks, they can borrow from other banks overnight, and that's called the Fed funds rate. And since it isn't overnight, it's very short term, so it's usually the lowest interest rate. But let's say it's at 1%. They can borrow at 1%. Now what they can do is they can take those funds and they can turn around and invest them in a longer term vehicle. Let's say a 2-year treasury note that yields 3%. So banks can borrow at 1%, they take those funds and they invest them and they earn 3%, so they take the difference, 2% they can earn on it. Sounds like a great way to earn money, isn't it? But guess what? In the FX markets, we can do the same thing as individuals. It's called the carry trade. Let me explain. Let's say that we're looking at a currency pair. Let's say it's the Euro-Australian dollar currency pair. Okay? What we want to do is we want to know what the interest rates are associated with each of these currencies. Because after all, we are financing the transaction in order to hold on to it long term. Now, where do we find those rates? One place is on the front page of the Daily FX website. You'll see central bank rates, and all the interest rates are associated with the major currencies that we trade here at FXCM. These are set by the central bank. Otherwise, the euro interest rates are set by the European Central Bank. And the Australian rates are sent by the Central Bank of Australia, okay? Including the US dollar is sent by the Central Bank of US. So it's actually, those are interest rates that are set by central banks. Now, what we want to make sure is the currency that we're buying has a higher interest rate than the currency that we're selling. Let me explain. If we buy the Euro-Australian dollars, there's actually two transactions going on here. We're buying the euro, and at the same time, we're selling the Australian dollar. But we only have to point and click once on our trading station. That's all done internally for us through our trading platform. Okay? So we want the euro to have a higher interest rate than the Australian dollar. But right now, things are kind of flip-flopped as we're recording this. So let's say that the euro is yielding 1%, and the Australian dollar is yielding 3%. What we would want to do would be to sell the Euro-Aussie. Okay? So we're selling the euro, which is the lower interest rate, and we're buying the Australian dollar, which is the higher interest rate, and we take the difference. Okay? And that's called the rollover. A better place to find out what that rollover amount is right in the advanced dealing rates window of your FX trading station. You'll see the rollover for selling the position, and you'll see the rollover for buying the position. What we want to look for is the plus sign in front of those numbers, because that's what we're earning. If it's a minus sign, that's what we have to pay. We earn or pay that every day at the 5 p.m. Eastern close. That's why there's an administrative close on a daily basis. One reason is to handle these rollover charges. Okay? Now, a couple of important things to keep in mind when we're doing this is, number one, it doesn't make a lot of sense to earn $5 a day in interest if you're losing $100 a day because you're trading against a trend. So carry traders, the people who take advantage of this, are also trend traders. If you've got this Euro-US Australian dollar trend going down and you sell the Euro-Aussie, then number one, you're earning money on the market movement, and number two, you're earning money on the rollover. It's very, very powerful when you have both of those factors going for you at the same time. It's so powerful, in fact, that this is how most of your big experienced traders in FX make their money. They're carry traders. They earn their rollover, they trade with the trend to take advantage of both situations, because again, it can be very, very profitable when you have both things going for you at the same time. So look more into carry trades, check out the central bank rates on the front page of Daily FX, and don't forget to check those rollover amounts in the advanced dealing rates windows of your FX trading station. Again, this is Tom Long. Thanks for joining me.